Inefficiencies in price delivery. The algo must book price in an efficient manner, because markets must be booked efficiently. But what is efficient delivery? Well, efficient delivery basically means that the algorithm delivers price within a certain time period in an equal manner, delivering both buy side as sell side within a certain price range. For example, if price is trading between the prices of 1 and 10, we must see an equal amount of buy side as sell side delivery. If between the prices 1 and 10 we see, for example, buy side delivery twice, but sell side delivery only once, there's an imbalance in the delivery of price. So the algorithm will deliver sell side again within that price range to actually balance it and deliver efficiently. Here we see a buy side imbalance, a sell side inefficiency. The imbalance is on the buy side and the inefficiency is on the sell side. This is also called a bullish fair value gap, or basically a gap within price. What this basically means is that within those three candles, there was no sell side delivered in the third candle that rebalances the price range between the third candle and the first candle, and that's why you see that gap. In a fully efficient market, we would see the third candle actually wick down into the high of the first candle, and that's what we call an immediate rebalance. So sell side gets delivered again and no gap gets created, and then it trades way higher. Then we have an efficient delivery within price. But this isn't the case in this example, in this theory, because there's a lack of sell side delivery within that price range. So the algorithm has to retrace lower into that BC, delivering sell side, before it is allowed to expand higher. This is really important to understand. I will talk about immediate rebalances, etc. later on in the content, but now it's just important to understand that these type of gaps act as magnets on price, and these can be used for many different purposes. Here we have a sell side imbalance and a buy side inefficiency. The imbalance is on the sell side and the inefficiency is on the buy side. This is what we call a bearish fair value gap. In again a perfect market, we would see the third candle retrace into the low of the first candle, but that doesn't happen. So there's a gap within price. Why? Well, there's no buy side that has been delivered between those black lines, those two black lines. So the market has to retrace into this gap, into this area, delivering buy side before it is allowed to expand lower. As some of you might have already guessed, this theory about efficient market delivery doesn't only apply to three candles. It can be used throughout the market, because this is what is really important for the algorithm. I personally look at market structure through this perspective of efficient delivery. Here we can see a price range from 1 to 2. This price range is imbalanced. Yes, I'm going to talk about balanced price ranges for 1 second in this lecture. I will talk about them more in the future, but for now, it's just important to understand the basics of market structure. We can see that the market trades lower, 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 or delivers sell side into this 1. This can be any price, this is just theory. So the market delivers sell side, then it delivers buy side, and then it delivers sell side again. So let's do simple calculations. the market has delivered sell side twice, 1, 2, and it only has delivered buy side once. So, if you would look at it from a seesaw perspective, you could imagine that the sell side has been delivered more, so weighs heavier than the buy side. So, buy side has to be delivered again within this price range in order for the market to make this a balanced price range and thus deliver efficiently and thus being allowed to expand lower if that is the expected direction or if the draw liquidity is lower. So it's really important to know that a CB or an imbalance must break the low that got created here at 1. Once the market retraces and offers buy side again within this price range of 1 to 2, this whole price range becomes balanced and thus we can expect the market to expand lower if our draw on liquidity is in fact lower. This is when real support and resistance works. This is it. And trust me, you will see more examples of this over time, but once you understand this perception about efficient delivery, man, you will start to see things within price that you are unaware of yet, and it's unbelievable. It's absolutely unbelievable. But let's dive into some chart examples.